Hi, welcome back to Joe Blogs. In this episode, I want to talk to you about the forecasts for the global economy for 2023 and 2024. The World Bank, which is an organisation that is funded by 189 different countries from around the world, is focused on trying to reduce poverty and food insecurity across the world. And as part of its mission, it produces a variety of research and looks at what's going on in every country and amalgamates all of that data to create world forecasts. And they've just produced their latest set of forecasts for 23 and 24. And as you won't be surprised to hear, they've downgraded their expectations compared to their previous forecasts back in June 2022. So in today's episode, we'll go through the details of the World Bank report. We'll have a look at what's been happening with trade and what's forecast to happen, what's been going on with commodities, inflation, interest rates, and then we'll look at the growth forecasts, and also we'll touch upon food insecurity because that's a big issue for the World Bank. And then finally today, I'll wrap up with my summary. So what I think is likely to happen during the course of 23 and 24, because the latest World Bank expectations are based on where we are right now. But as I mentioned, this is a downgrade against where we were 6 months ago. And it's likely that if things get worse across the globe, then we could see further downgrades and further reductions in the expectations for the global economy. So before we get started on all of that, if I could ask you to give me a thumbs up at some point during this video, if you're enjoying the content, I'd really appreciate that. Please subscribe if you haven't done so already. Don't forget, I always include chapters in these videos, so if you don't have time to watch everything, you can skip through things. And if you'd like to support the channel, please have a look below, where you'll find links to YouTube, super thanks and membership, as well as Buy Me a Coffee, Patreon and Amazon shopping links. I'd like to say once again, thank you so much to everybody that supported the channel, and also to everyone that subscribed. I really appreciate it. The World Bank has produced its Global Economics Prospect Report, which is an update against the report that it provided last in June 2022. And this report is far more pessimistic than the previous version. In the foreword of the report, the bank states that our latest forecasts indicate a sharp, long-lasting slowdown, with global growth declining to 1.7% in 2023, from 3% expected just 6 months ago. The deterioration is broad-based in virtually all regions of the world. Per capita income growth will be slower than it was during the decade before COVID-19. The setback to global prosperity will likely persist. By the end of 2024, GDP levels in emerging market and developed economies will be about 6% below the expected level on the eve of the pandemic. Median income levels, moreover, are being eroded significantly by inflation, currency depreciation, and underinvestment in people and the private sector. Global growth is projected to decelerate sharply this year to its third weakest pace in nearly 3 decades, overshadowed only by the 2009 and 2020 global recessions. This reflects synchronous policy tightening aimed at containing very high inflation, worsening financial conditions, and continued disruptions from the Russian Federation's invasion of Ukraine. Global growth has slowed to the extent that the global economy is perilously close to falling into recession, only 3 years after emerging from the pandemic-induced recession of 2020. The world's 3 major engines of growth, the United States, the Euro area and China, are undergoing a period of pronounced weakness, with adverse spillovers for emerging market and developing economies, many of which are already struggling with weakening demand conditions. The weak global outlook and heightened downside risks highlight the challenges facing policymakers around the world. Urgent action is needed to attenuate the risk of global recession stemming, in part from the fastest and most synchronized monetary tightening in decades. So as you can see, the overall perspective of this report is very gloomy and pessimistic. But let's have a look at the details as to how they've come to these conclusions. This chart shows the percentage increase in global trade in 2021, 2022 and 2023. So the first thing to note here is the significant slowdown in global trade in 2022 and 2023. Now, the figures for 2021 were actually quite exceptional because of the fact that 2020 represented the year when a lot of the world went into lockdown. So many companies closed their doors, there was not a lot of business being done, and so the year-on-year change between 2020 and 2021 was very high, coming in at 10.6% growth. The World Bank has included the green dashed line across the middle, which shows the average rate of growth between 2000 and 2019. And you can see that the average rate of growth was 5%. So the actual rate of growth achieved in 2022 of 4% was around 20% below the long-term average. However, if you look at the figures for 2023, the actual growth of 1.6% represents a fall of more than 70% against the long-term average. However, the orange line on the 2023 part of this graph shows the percentage increase in global trade in June 2022. And as you can see, that figure was 4.3%. So in the first half of 2022, the increase in global trade was actually higher. So the world was actually recovering. It was going in the right direction. However, the impact of Russia's invasion of Ukraine started to be felt in the second half of the year. And this chart shows the pressure on the global supply chain dating back to 2015. And the zero line represents an index and indicates a status quo situation, so no pressure on the global supply chain. Positive figures mean that there is more pressure, so there are delays in global supplies, and negative figures indicate that the global supply chain is improving. So you can see that between 2015 and 2019, pressure started to increase very slightly on the global supply chain. However, during 2019, things actually started to improve. But in 2020, when the world went into lockdown, we saw a significant negative impact on the global supply chain. Now, initially, as we came out of the pandemic, we did see an improvement. However, during 2021, there was significant pressure on the global supply chain. And this was because the whole world had stopped in the previous year. Containers were in the wrong positions, ships were also in the wrong parts of the world, and restrictions were introduced all across the world as a result of social distancing relating to COVID-19, which slowed down everything. It took much longer to load and unload at ports, to actually load ships. Everything was affected. And through the course of 2021, you can see that things got significantly worse. In 2022, things have improved, but when you look at the long-term average over the last 7 years, you can see that there is still pressure on the global supply chain, and this is obviously adding further difficulty to global trade. And this graph shows the Manufacturing Purchasing Managers Index dating back to the start of 2019. And if you follow the channel, you'll know that we've talked about the PMI a number of times. This is basically a survey of all of the purchasing managers around the world. And a score above 50 indicates that businesses are growing and expanding, and a score below 50 indicates that they're contracting. And the blue line in this chart plots the PMI. And as you can see, almost immediately following Russia's invasion of Ukraine on the 24th of February 2022, the PMI started to drop from a level of around 63 to the current level of around 52. And if you look at the trend over the course of the last 12 months, it's significantly downward. And it's very likely that the global PMI will cross the crucial 50-point barrier at some point during 2023 and indicate that the world is going into a slowdown. Now, the red line on this chart plots the level of inventories all around the world. And the reason that this is important is because it's measuring how much stock everybody is sitting on. And generally speaking, if the levels of stock that a supplier is sitting on are rising, that means that sales are falling. And you can see that over the last 12 months, there has been a significant movement upwards in the level of inventories. And following Russia's invasion of Ukraine, the level of inventories actually crossed the 50-point mark. So this indicates that inventories are rising, and this will cause a problem for suppliers because a lot of their cash will be tied up in stock, which means that they won't be able to invest in the business. And at some point, if they get caught with all of that stock, if sales started to fall, then they will start to experience cash flow problems and potential liquidity issues. This chart plots the percentage of countries with rising inflation in the period between January and November 2022. So the blue bar charts give the actual percentages. The red line shows what was happening with advanced economies, and the orange line shows what was happening with emerging and developing economies. And the dashed orange line across the middle here represents 50%. So as you can see, in the first 10 months of 2022, more than 50% of all of the countries in the world were experiencing rising inflation. And if you follow the channel, you'll know that rising inflation is a problem for all economies. Because governments and central banks have a target rate of inflation, a lot of advanced economies have set 2% as their target rate. And once inflation rises above that level, then monetary policy has to be changed to try to bring it back down. And the main two mechanisms of achieving that are reducing the supply of money, so stopping quantitative easing, which helps grow the economy, and also increasing interest rates, which increases the cost of debt and puts more pressure onto everybody and all the companies in an economy. In January, 68% of all countries had rising inflation. By February, it was 79%, and by March, we were above 90%. and the figures remained above 80% until July, when it dropped to 70%, 55% in August, then bounced back to 64% in September, came down to 52% in October, and was at 32% by November. And as you can see from the red and the orange lines on this chart, this issue affected both advanced economies and emerging and developed economies. And the reason for that was because we saw a massive increase in the price of all commodities such as oil, natural gas, wheat, and everything else that needs to be imported by all countries in the world. So the increase in prices affected goods that are essential for all countries, so it was indiscriminate. And as I've mentioned before on the channel, as food prices went up, the poorest people all around the world were affected the most because they spend the vast majority of their income on food. And of course, the problem of inflation hasn't gone away. This chart is just merely showing the percentage of countries that have rising inflation. That percentage is coming down, but the actual inflation levels are still very high. So if your inflation rose to 10% and has now come back down to 9%, 9% still represents a major problem. So even though you would no longer appear on this chart because your inflation is no longer rising, you've still got to deal with that major problem. And this chart shows the current inflation expectations for the short term, which is defined as 1 year, and the long term, which is the 5-year outlook for the world, advanced economies, and emerging and developing economies. And as you can see, it's expected that inflation is going to remain high for the next 12 months. The forecast average rate of inflation for the world for the next 12 months is 5.7%. And that's split down into a forecast of 5.3% for advanced economies and 6.8% for emerging and developing economies. And as we just discussed, the target rate for most advanced economies is 2%. So this is almost 3 times higher than that target rate. And therefore, it's likely that the central banks will keep focusing in on inflation, which means that it's likely that we will get a prolonged period of high interest rates. And this chart shows the movement in interest rates in the US and Europe dating back to January 22 and includes forecasts through to September 23. The blue line here shows the USA and the red line the European area. So as you can see, and as I'm sure you'll be fully aware, interest rates have risen rapidly over the course of the last 12 months in both Europe and the USA. However, the USA acted quicker than Europe, and you can see that rates started to increase from early in 2022. Now, if we look at the forecast for the USA, it's expected that rates will peak around April-May time and will hit a high of around 5%. However, by the end of the year, it's expected that rates will come back down to around 4.7%. Now, if we look at the situation for Europe, it follows a very similar trend. However, Europe only decided to increase interest rates from June onwards and has been increasing rates much slower than the US, with the official rate for the euro area currently being 2.5%. The forecasts for 2023 show that rates will continue to increase and will hit a high of 3.25% by the end of September 23. I think one of the interesting things to note from this chart is the marked impact of Russia's invasion of Ukraine. The dotted line here shows the forecast movements in interest rates for 22 and 23 that were made in January 22. So that was before Russia made their invasion. And you can see that it was expected that interest rates would rise in both the USA and Europe, however, at a very slow rate. And at that time, it was expected that by September 23, the official rate of interest in the USA would be 1.25%, and Europe would still have 0 interest rates. So this is one of the reasons why the World Bank has now downgraded all of its forecasts, because as interest rates have risen dramatically, it's increased the cost burden on everybody that's got debt and all of the countries that have got debt, and therefore there is less cash flow available, and so people are having to cut back, and that is slowing growth and reducing GDP. This chart shows the actual global growth rates dating back to 1990 and includes forecasts for 2023 and 2024. So as you can see, the global economy has achieved growth in 30 of the last 32 years. The only years where we have seen a fall in global growth were 2008, which was the time of the global financial crisis. This was caused by a lack of liquidity. We saw a lot of banks getting into difficulty, going bust, having to be nationalised, and was a period of complete chaos and disaster in the financial markets. And the only other year where we've seen negative growth was 2020. However, the circumstances around that were entirely different. The 2020 downturn was as a direct result of all of the global lockdowns that were introduced as a result of the COVID-19 pandemic. So it was very different circumstances. This wasn't really economically driven. It was more driven by other geopolitical factors. The World Bank is now forecasting that GDP will increase by 1.7% in 2023, which will rank it as the fourth worst year since 1990. The only other year that's had less growth was 1991, when the global economy grew by 1.3%. And the forecast growth of 1.7% is a downgrade from the previous forecast of 3% that the World Bank gave in June 2022. And the positive news is that in 2024, the World Bank is projecting that global growth will increase to 2.7%. Now, this chart shows a split of the global growth projections for 2023 and 2024 between the advanced economies and the emerging and developed economies. And as you can see, it's expected that the emerging and developing economies will grow at a much faster rate than the advanced economies. In 2023, it's expected that the advanced economies will only achieve 0.5% growth. And in 2024, that growth will increase to 1.6%. Now, obviously, these forecasts are an average of all of the advanced economies. So some economies will grow at a faster rate and some will be at a slower rate. And this is really where the recession analysis comes in, because it's extremely likely that various countries across the world will enter recession during 2023. We know that Russia is already in recession. The UK is virtually there. It's not officially in recession, but the actual figures show us that it's very likely to go into recession, and it's likely that other countries will follow. So this average of 0.5% will include some countries that are in negative territory. And the same concept applies to 2024. So making up the 1.6% forecast growth in that year will be some countries that are achieving significantly more and others that are delivering significantly less. Now, when we look at the emerging and developed economies, these are forecast to achieve 3.4% growth in 2023 and 4.1% in 2024, which at the face of it looks very good. However, for a lot of these economies, they've been achieving closer to double-digit growth over the last few years. So this represents a significant slowdown against previous expectations. Now, the other thing to note on this graph is that the World Bank has undertaken some sensitivity analysis. They've looked at a number of other scenarios, and these are shown by the orange and red dashes on the blue bar charts. The orange mark represents what will happen to GDP growth in the event of a sharp downturn, and the red mark shows what will happen in the event of a global recession. For 2023, a sharp slowdown will reduce GDP growth to 1.3%, and a global recession will take it down to 0.6%. And if we look at how that impacts the advanced economies, a sharp slowdown will reduce growth to 0.1%, and a recession will take it into negative territory of 0.5%. And for emerging and developing countries, the two scenarios will reduce growth to 3% and 2% in 2023. Now, the World Bank is focused on trying to reduce poverty and food insecurity globally. And this chart shows the movement in food insecurity in low-income countries between 2019 and 2022. And obviously, the first thing that stands out on this chart is that there has been a material increase in food insecurity over the last 3 years. In 2019, it was estimated that around 55 million people were living in a situation of food insecurity. However, by the end of 2022, that number had increased to almost 105 million, which represents an increase of almost 100%. And this increase is related to a number of factors. Firstly, the price of food has increased significantly in 2022, making it less affordable. And as I've said before on the channel, the poor people of the world spend most of their income on food. So when the price goes up, that generally means that they can afford to buy less food and therefore become less secure. And in addition to food price rises, we've also seen a general increase in inflation. So the cost of everything else has gone up. So that's putting more pressure on people's budgets. And GDP has started to slow down. So people aren't earning as much as they were historically, and that's making the situation even worse. So what's the summary and conclusion today? Well, I wanted to make this video really to bring you up to speed on what the current outlooks are for 2023 and 2024. And as you've seen in today's video, the World Bank has now downgraded its expectations for both years. We've seen a reduction from 3% growth, that was their previous forecast, to 1.7% growth. So that's quite a material movement. And this forecast means that 2023 will be the fourth worst performing year out of any year in the last 33 years, which is obviously bad news. But as we just discussed, these are average forecasts. Some countries will perform better and some countries will perform worse than these forecasts. And it's very likely that we will see lots of countries falling into recession, so actually seeing negative GDP movements in 2023 as a result of the rising costs, the rising inflation, and the rise in interest rates that we've seen in this video. Russia's invasion of Ukraine had a knock-on impact to lots of different things, but the immediate impact was an increase in oil prices, gas prices, and food prices, and that's hit all countries around the world. But as a result of that invasion, what we saw is Europe having to change all of its purchasing. So it moved away from buying energy products from Russia to buying them from elsewhere. And what that meant was that there was an increase in prices as the global supply chain started to shift. And that's impacting on all of the poorer countries because they were able to source things at a lower cost historically. Those costs have gone up, and it's likely that those higher costs will persist throughout 2023. And when you combine those higher costs with increases in interest rates and inflation, it's meaning that the cost of living is going up for everybody. And that's now having a detrimental impact on the global economy. And one of the things that I think will be really interesting to monitor over the course of 2023 is whether or not the World Bank revises its forecasts down further. Because this is a snapshot. This is what the World Bank thinks right now, given everything that's going on. But if the war in Ukraine carries on, if that goes on for the whole of 2023, we're likely to see more turmoil, we're likely to see more volatility on oil prices and other commodities, and that will have a knock-on impact to the globe. The other issue that I haven't touched on yet in this video is what's been going on in China. So over the last 3 years, China have had severe lockdowns. They followed a zero-tolerance policy for COVID. Now that policy has now been scrapped, which is potentially good news for the global economy. But the immediate impact has been a really big increase in COVID cases and an increase in deaths. And potentially that could have a negative impact on the global economy over the course of the next 3 to 6 months. And if it does, then that might mean that the World Bank and other economic forecasters have to revise down their forecasts again. Because if COVID really does start to spread and causes a major problem and puts pressures on the health system in China, there is a possibility we could see lockdowns reintroduced. That would close down the Chinese economy and further add to the acceleration in decline for the global economy. So as with most things that we discuss on the channel, this is a live situation. It's changing all the time. And I'll keep you up to date on any major developments and news. But I wanted to share this data because I think it's always good to look at data, to look at what experts in any field are saying is going to happen. Nobody really knows what's going to happen in 2023. But all you can do is look at what's happened so far, put together some charts, look at the trends, look at what's happened in the past, and then apply all of that analysis to where we are right now to make your forecasts. So that's basically how these things work. So hopefully you found the information in today's video useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up, and thank you so much for watching this video all the way through to the end.